Here is why Jeff Bezos' warning about delaying major purchases like refrigerators matters right now. Global macro forces are reshaping consumer behavior. Inflation remains elevated, with core CPI hovering near 3%, while central banks grapple with balancing growth and price stability. Gold's 0.41% surge today reflects persistent inflationary pressures and geopolitical uncertainty, factors that erode purchasing power. Bezos' caution aligns with a broader narrative. Consumers may face higher costs in 2026, driven by energy prices, supply chain bottlenecks, and potential rate hikes. Bitcoin's 0.12% gain mirrors investor sentiment toward assets perceived as hedges against fiat depreciation. Yet, volatility persists, a reminder that even safe assets like gold trade within narrow ranges. The Fed's dual mandate complicates decisions. While accommodative policy supports economic activity, tightening risks could accelerate inflation. Traders must weigh cyclical demand against structural shifts, like automation reducing long-term need for household durables. The S&P's flatline underscores market complacency, but historical precedents show that prolonged inflation often precedes correction cycles. Institutional investors should monitor real yields, commodity inventories, and wage growth metrics, key indicators of underlying inflation persistence. If this analysis was valuable, subscribe for more institutional insights. Link in bio.